you know, bubbles. Bubbles actually are very common. They're far more common than we think they are, and they occur in all kinds of different asset classes. They occur in all kinds of different geographies, in all kinds of different markets and such at different times. They're kind of staggered all over the place, and there was a book written by a former news anchor for CNBC, Ron Insana. And normally news anchors don't write good books, but Ron Insana wrote a book called Trend Watching, uh, which um, which listed a number of different bubbles. And if you just go through the book, you'll see that almost all the time, somewhere around the world, there's some bubble in very much in the works or in progress or getting burst and so on. And so they're very common phenomena, partially because humans vacillate between fear and greed. And as long as we have humans involved with markets, we're going to have bubbles. And so I want to just highlight a few bubbles in the past and also a little bit about the present. So in uh, in the early 1920s, really like 1919 to 1922, we had a very major automobile bubble, and it burst in a pretty significant way in 1922. But then the remnants were all taken out in the next 9 or 10 years, and so if you looked at the U.S. kind of from a investor or entrepreneur point of view, and you were in the year, let's say, 1920 or 1921, so World War I has ended. A lot of the world infrastructure, especially in the developed world, is destroyed, except North America is untouched. Europe is pretty much in flames, and the the US is industrializing. It is the emerging market, and you can clearly see that the all the trends are in the right direction. The population is growing. Uh, Highways and roads are getting built at a very prolific rate, and automobile sales are forecasted to grow quite significantly. I mean, if you look at what actually happened, let's say between 1921 and 1922, auto sales went up by 50%. And that is, rivaling what was happening a few years ago in China on auto sales. So the US was truly an emerging market, and these were the go-go 20s. Everything looked like, it would go nothing but go straight up. And investors basically, you know, had certain perspectives. One is they expected that the U.S. population would rise. In 1921, the U.S. population was 109 million, and they were absolutely correct that the population rose nonstop for the next 94 years. And even now, when we're at 300 odd million, it's going to continue growing for as far as we can see, just the way the demographics of the country are. So they were absolutely right that you had a very long tailwind of population growth. Uh, Investors also expected that the country would industrialize. Uh, when the United States was formed, something like 97, 98% of the population then was focused on farming, and that number had been continuously coming down, and until the Industrial Revolution, and then it was coming down quite radically. So people could see that the country, as it industrialized, autos would grow big time, and they were absolutely right. The 1.5 to 2.5 million number. Now this year we're forecasted to have more than 18 million cars sold in the U.S. So all these things were correct, but nearly all the 1921 investors in autos or motor companies lost their entire investment, and this was a very major bubble at the time. And if you go through some of the next few slides that are coming up, this is a list of all these different car companies, and next to their names is their year of birth and year of death. So, like, you have like the Stanley Steamer 1897 to 1927, or you have this Lafayette from 1919 to 1924. So that car company lasted 5 years. And so we had hundreds of auto manufacturers uh, come up with a variety of wide range of cars, and lots of money went into these ventures. And in the end, by the time the dust settled in 1932, we were left with three major U.S. manufacturers for cars, and almost everyone else was wiped out. And so this was a very significant bubble that took place. And basically, it wasn't just investors. I mean, a lot of entrepreneurs bought into this, and uh, a lot of these companies went public, and then they went bust after going public. So we had a very significant bubble nearly about a century ago, at about 90, 93 or 94 years ago.